Program is brought to you by Real Estimate, Australia's #1 property value estimate. Get your real estimate today on realestate.com.au.
Welcome back. Nationally, there were 1,836 auctions with a clearance rate of 62.3% in the past week. In Sydney, there were 706 auctions with a clearance rate of 63.2%. In Melbourne, there were 693 auctions with a clearance rate of 65.1%. In Brisbane, there were 90 auctions with a clearance rate of 53.3%. In Adelaide, there were 54 auctions with a clearance rate of 79.6%. Canberra, there were 59 auctions with a clearance rate of 71.2%. And joining me now is economist Angus Moore from REA Group. Angus, looks like some pretty strong clearance rates over the weekend.
Yeah, that's right, Ed. We've seen pretty strong results. And I mean, that's really been true throughout much of the past 6 months or so. We had a pretty solid autumn. Winter was obviously quieter. Clearance rates were down a little bit, but still fairly solid and certainly much better than we were seeing in, say, spring last year when things were looking pretty soft. So we're kind of continuing into that as we head into the first weekend of spring. It looks like things are staying pretty solid.
Yeah, spring selling season. So just how much more stock is there now starting to come onto the market?
It's certainly picking up. We have seen a much busier weekend in terms of auction volumes, and that's really been the case, over the past month. Things have been starting to ramp up, and we'd probably continue to expect to see that. Obviously hard to predict these things, but spring is normally the peak, and, kind of October, November, depending which market you're looking at, but October, November tends to be the busiest time of year.
Yeah, we saw almost 1,000 properties 1 or 2 Saturdays ago in Victoria. Which markets are performing the best right now?
Yeah, we're seeing pretty reasonable conditions across the country, but Sydney and Melbourne in particular are starting to really heat up compared to what we were seeing, say, a year ago. Midwinter was actually quite busy for most markets relative to midwinter. Again, it's midwinter, it's quiet, but relative to what's typical, both markets are actually pretty busy, and it looks like, given the sort of volumes we're seeing on the auction front, that's continuing as we head into spring.
Now, you've released some housing affordability research the last few days. We've got an index that we can put up on the screen from REA Group. So what is this actually? It's up now. What's this actually telling us? You can sort of see it drops off a cliff.
Yeah, so this is our new PropTrack Housing Affordability Index. And so it's kind of a new way of measuring housing affordability that's a bit more comprehensive than other ways of looking at it. And in particular, it looks at affordability for households right across the income distribution. It's not just kind of an average or a typical household. So it's much more comprehensive. It also measures affordability as the share of homes that you can buy, as opposed to what a typical hypothetical home might cost you. So it's sort of a more intuitive way of thinking about it. The kind of bad news from the index is that affordability has hit its worst level in at least 3 decades since our records begin. And the reason for that is the sharp increase in interest rates. We've seen huge increases in mortgage costs that's come with a consequent fall in borrowing capacity. And so households just can't buy as many homes as they used to be able to.
We've got another chart showing affordability on a state-by-state basis across Australia. Any surprises here?
Yeah, so perhaps not in some senses. New South Wales is the least affordable state. That probably won't come as a surprise to anyone. That's been true for pretty much every year over the past 3 decades, with a brief exception during the sort of 2007 to 2010 boom in WA, when WA got very expensive, became the least affordable state. I think what maybe is surprising is the number 2 here, which is Tasmania. So Tasmania, as recently as 2017, 2018, was actually one of Australia's most affordable states. But since then, it's now the second least affordable and only just behind New South Wales. And the reason for that is prices have doubled in Hobart.
Is there a lack of stock as well? Or?
There has been through the pandemic. We saw incredibly low numbers of homes available for sale. That's improving now. We're not seeing as much. And actually, prices in Hobart have been a bit softer over the past 12 months. But it's just not been enough to make up for the enormous growth we saw between sort of 2016 and end of 2021, early 2022.
Got another chart showing affordability for households over time, and you sort of touched on this before, saying we're basically at the worst point for affordability in upwards of 30 years.
Yeah, that's right. So this is kind of the intuitive way to understand the index. The index tracks the change in the share of homes right across the income distribution, and this sort of breaks it down for a couple of key points. So a low-income household at the 20th percentile, so about 65 grand a year, a median or typical, about $105,000 a year, and a high income, so 80th percentile, 200 grand, a bit over 200 grand a year, and what share of homes they can afford. So the kind of key takeaway here is a typical household could afford to buy just 13% of homes sold in the past year.
Right.
even a high-income household could only afford just over half of homes sold in the past year. So I think that really highlights the scale of the challenge that we're facing with affordability and how much it's deteriorated from a couple of years ago when low interest rates meant affordability was actually pretty good.
It was very good. And we've got a final chart we can put up showing mortgage repayments as a share of income. And I guess this one really illustrates, OK, you've got the 1990s there where interest rates were incredibly high. But now with rates going back up again, affordability is getting harder and harder.
Yeah, exactly right. I think one of the nice things about this chart is that it does go back a bit further than the PropTrack Affordability Index. Unfortunately, because it's a bit more demanding in the data front, because it is more comprehensive, it only goes back to 1995. This is a simpler measure, but you can kind of push it back a bit further and compare to that 1989-1990 period. The unfortunate news here is, today we're only just below what we saw in 1989 when interest rates were north of 15%. It's really, we're kind of splitting hairs at this point in terms of mortgage serviceability and how tough it is today. So affordability is very, very hard today. And of course, the thing that's even harder today than it was in 1989 or 1990 is saving a deposit. That's not shown here, but it's obviously much harder today.
Angus, I'm sorry, we're out of time.
Thanks, Ed.